Hey everyone, Duke Dog here. I wanted to share another practical tip video on how to take some wins during a down market. We'll be using the VET token as an example for this video, but be aware I am not part of their team, nor am I compensated by them in any way for making this. The reason I like VeChain for this is because, like a penny stock, it's accessible to anyone and not just catering to the super rich. So any token you would use for this needs to have good stats, of course, like high circulating supply, week over week volume, which shows you it is being traded regularly. Also, you want to check and see if they are an active shop. And you can do this by looking at their news exposure. Are they getting recognized by other businesses? Are they creating partnerships and all that? You can look at their job careers page as well, which can give you just a little bit more assurance of their growth. Are they actively hiring? Are those active job listings valid? And other hallmarks of what I would consider active, and VeChain is such a group. When deciding to make trades on a token in the down market, it is all about the trading pattern. VET, for example, has a very steady range that it always tends to stay within, which makes it very safe and favorable for making profitable down market trades. So let's do some math really quickly here. Let's say you only have about $200 to invest. So you can buy the token at about, 2.5 cents, and that would give you about 8,000 VET token. Well, within an hour or maybe even a day, you can sell that for that fluctuation within the range. Let's say half a penny more. Let's just say, for the sake of argument, 3 cents. And what that would get you is a gross sale of 240. Remove your initial investment of 200. And that gives you about a $40 profit. Take out some fees, trading fees, that kind of thing. Let's say $38. Well, that's not bad for 1 or 2 trades. You can do that over the course of 10 or 12 times a month. You get about $456 or $500 a month. Of course, the more you spend, the more you make. So if you're able to invest $1,000, you can make about a profit of, $400-ish on a couple trades over that same time period. And if you do that, let's say 10 or 12 times a month, you could end up with around $4,000. Now you say, okay, that's too good to be true. This is fake, but stay with me. Let me show you how to be safe within that margin and how I increment towards that. Looking at VET over the past year, we see that it's staying within about 1 to 4 cents. So instead of trying to buy at those edges, we can press those numbers to find a safer and more reliable range that will allow us to trade more often. So by doing that, we come up with our new buy and sell triggers. In other words, this is the new high and low prices that will determine when we act to make our trade. Now you say, well, by compressing those margins, you limit me now to less than a penny per token profit. And I say, yes, by being comfortable with small gains and not getting greedy, you stand to profit in the long term. So patience and small incremental gains are your friend in the down market. You're still going to make 70, 140. You can parlay that money into make more in your future trades. Now my point is there's a rapidly flowing river of money that's already taking place. All you have to do is dip your cup into that stream and pull out your share. Now there's more than enough here for all of us, and it's actually in my best interest to share this freely on YouTube and not behind some paywall, because the more people trading, the higher the average ranges will increase over time, making all of us more profitable. Now, while this isn't rocket science, it can be tedious. So I get questions all the time saying, hey, I understand the concepts, but what are the exact steps I need to do to make this happen? Well, here they are. Feel free to pause the video or take a screenshot of this if needed. Of course, leave comments, like, subscribe, enable that bell, all that good stuff. For now, this is Duke Dog, signing off.